Hello, my dear students. In this session, we are going to consider theory-based accounting. Now, consider the first question. How goodwill is recorded on retirement? So, this question is from the retirement of a partner. Like at the time of retirement, generally we have to show the treatment of goodwill, and a retiring partner generally take his or her benefit for the share of goodwill. Now, ultimately here, if we pass the journal entry, then it will be actually answer here how goodwill is recorded on retirement. So here in this cases, like simple entry we can pass like remaining partners capital account debit to retiring partners under gaining ratio, and here we will take the amount of goodwill, that is retiring partner shares. From the full value of goodwill, first we will calculate retiring partner's share of goodwill, and then we will pass this entry, that is remaining partner's capital to retiring partners under gaining ratio. So that will be the answer. Just journal entry, but with the bracket you have to mention one and which share, that is gaining ratio, and another amount of goodwill, that is retiring partner share. Now we will enter the second question. State any two items of deduction that may have to be made from the amount payable to retiring partners. State any two items of deduction that may have to be made from the amount payable to a retiring partner. We know at the time of retirement, so many things are credited to the retiring partner's capital account, like opening balance of capital, general reserve, profit on the evaluation, like value of goodwill remaining to retirings. That way, like all are credited to give the benefit of retiring partner, but few such items are there which will be deducted from the retiring partner's capital. So here in this question it is being asked such type of item name you have to mention here. So very simple, here we know that if loss on the evaluation arises, that is generally deducted from retiring partner's capital. So first item, that is loss on revaluation. Second item, if any undistributed profit is there, that also deducted. Like undistributed profit means profit and loss account debit balance. That time retiring partner's capital account debit to profit and loss account. More example, like if goodwill already appeared in the old balance sheet, that also deducted. To eliminate the old value of goodwill, generally we pass the retiring partner's capital to goodwill. So these are the answer of this question. Loss on revaluation, profit and loss account debit balance, as well as elimination of goodwill purposes. They are the amount, or these are the item generally deducted from the retiring partner's capital. Now next question, third question. How can a new partner be admitted? It does mean what is the provision? What is the provision of Indian Partnership Act regarding the admission of a new partner? So the question looking like difficult, and this question so many times came. It is very simple. Here you have to mention the provision of Indian Partnership Act, like if like all existing partner accept the admission, or if no objection is there regarding the admission of a person, that time a new person can be admitted of a partnership firm. Means with the consent of old partners or existing partner, a new person can be admitted. That is the provision. Now we'll come to the next question. Question number 4. If a fixed amount is withdrawn on the last date, number A, every month, number B, every quarter, then what time will be considered to calculate interest on drawing? Very interesting question, an easy question. Fixed amount withdrawn, like Mr. X is a partner, he will do rupees 1000 every month. and the last day of every month, what will be the timing? So regarding the interest on drawing calculation purposes, there is a timetable out there. If it is beginning of each month, if it is middle of each month, if it is end of each month, if it is if it is quarterly basis, then beginning of each quarter, middle of each quarter, end of each quarter. So there the timetable are there. If it is half yearly basis, then also different mode are there, which we already discussed. We have solved so many numerical problems. So now here 2 points is considered. One, it is if it is like last day of every month. When it is first day, then 6.5 month. When it is middle, then 6 month. When it is end or last day, then 5.5 month, 5.5 month. So answer will be 5.5 month. Now, if it is last day of every quarter, when it is quarter, if it is beginning, then 7.5 month. If it is middle, then 6.5 month. If it is end, then answer is 4.5 month. So you have to remember this thing, like monthly basis and quarterly basis. When quarterly basis and the last day, that time it will be 4.5 month. If it is beginning, then 7.5. So you have to remember the sequence here. Beginning 7.5, beginning 6.5, one difference only. End 5.5, here end 4.5, one difference here also you are getting. So that is the answer of this question. Now we will enter the next question. In the absence of partnership deed, what is the ratio in which the profit of the firm are divided among the partners? Like there is no partnership deed that time. No partnership deed regarding that distribution of ratio. So that time what action will be taken regarding the distribution of profit among the partners? Now here in this cases, when it is remains silent, that time the profit or loss, whatever may be, it will be divided equally, equal ratio. So answer will be equal ratio. If 2 partner, 1:1. If 3 partner, 1:1:1. So ultimately you have to remember that is equal ratio. Now there is the last question. State the provision of Indian Partnership Act regarding the payment of salary to a partner. Here also the same way, same question. Provision like Indian Partnership Act 1932. What provision is there regarding the salary of a partner? If salary is mentioned in the partnership deed or partnership agreement, then salary will be payable. If this point is remain silent, like regarding the payment of salary, one worker is working, like sorry, here worker, not one partner is working like throughout the month, and end of the month that partner claims some amount of salary, and if it is not mentioned in the salary in the deed, that time the partner cannot claim. But if the partner claim, the remaining partner, like if want to pay, can pay, cannot pay. So as per provision, that working partner cannot force to pay, means no salary will be payable to that partner. Regarding the payment of salary, if nothing mentioned in the deed, no salary. Not only salary, like commission, no commission. No salary, no commission, no interest on capital, no interest on drawing, all are no. Regarding the provision of Indian Partnership Act, we have to remember no interest on capital, no salary, no commission, no interest on drawing. Only profit sharing ratio will be equal, number 1, and number 2, if any partner provided the loan to the firm, that time that partner is entitled to get 6% interest on loan. So details I mentioned regarding the provision of that part. So here it is only one part is mentioned regarding the salary. No salary will be paid. So this is the last question. I think so it will help to the learner regarding the short question. 1 marks question, and these are all important type of question. It is a request to the learner, take these are all seriously. Now we are going to conclude this session. Thank you very much.